Hey everyone, welcome back to the channel. Today we're diving into a topic that can truly transform your financial perspective. 7 ways the rich builds wealth while the average often struggles. Whether you're looking to take control of your finances, grow your investments, or simply understand how wealth is built, these insights will help you see the big picture. So grab a notebook and let's get started. 1. Investing in appreciating assets. The upper class doesn't just work for money, they make their money work for them. They prioritize investing in assets that grow in value over time, like real estate, stocks, and commodities. These investments generate passive income, build equity, and appreciate over time, compounding their wealth year after year. For example, a wealthy individual might buy a rental property, earning monthly income while the property's value increases. In contrast, many middle-class families focus on saving rather than investing. They might put money into low-yield savings accounts or focus on paying off a mortgage rather than leveraging the equity to invest further. While saving is important, it doesn't allow their money to grow at the same rate as investing in appreciating assets. By not taking advantage of opportunities like stock market returns or rental income, they miss out on the power of compound growth. 2. Multiple income streams. The wealthy understand the value of diversification, not just in investments but also in income. They cultivate multiple streams of income, including rental properties, business ventures, dividends, royalties, and high-paying careers. This diversification spreads risk and ensures steady cash flow, even if one source dries up. For instance, an entrepreneur might run a successful business while investing in dividend-paying stocks and owning a rental property. These streams of income complement one another, creating stability and opportunities for further investment. On the other hand, middle-class individuals often rely on just 1 or 2 income sources, like a full-time job and perhaps a small side hustle. While this approach provides stability, it limits financial growth potential. A sudden job loss or economic downturn can have a devastating impact, as their entire livelihood depends on limited income sources. 3. Leveraging debt wisely. This might surprise some, but the upper class sees debt as a tool, not an enemy. They strategically use debt to finance investments that appreciate, such as real estate or business ventures. For example, a wealthy investor might take out a loan to purchase an apartment complex. The rental income pays off the loan while the property's value increases, creating long-term wealth. The middle class, however, often has a more negative view of debt. They focus on paying off personal debt, like credit cards or student loans, as quickly as possible without considering how certain types of debt could be used to build wealth. For example, taking out a low-interest loan to invest in a business or property could potentially yield higher returns than the loan's cost. The key is understanding how to manage debt responsibly to maximize its potential. 4. Tax optimization. Here's a major difference. Wealthy individuals actively engage in tax planning to minimize liabilities. They use legal strategies like tax-advantaged accounts, deductions, credits, and even business structures to reduce the amount they owe. For instance, a wealthy entrepreneur might set up a trust or a holding company to protect their assets and optimize taxes. Middle-class families often lack access to sophisticated tax strategies or the resources to implement them effectively. They might not know how to take full advantage of available deductions or miss out on tax benefits like investing in retirement accounts or using depreciation for rental properties. This difference in tax strategy means the upper class keeps more of their money, while the middle class often pays a larger percentage of their income in taxes. 5. Education and networking. The wealthy invest heavily in education, not just formal degrees but also courses, seminars, and workshops that expand their knowledge. They also prioritize networking, building relationships with influential people who can provide insights, opportunities, or partnerships. For example, attending an exclusive business seminar could lead to a joint venture or an invitation to invest in a lucrative project. In contrast, middle-class individuals often don't have the same access to these resources. Time and financial constraints might prevent them from pursuing further education or attending networking events. Without these opportunities, they miss out on the connections and insights that can lead to wealth-building ventures. 6. Time management. Time is the most valuable resource, and the upper class knows how to use it effectively. They focus on high-value activities that yield the greatest returns, using strategies like time blocking to maximize productivity. For example, they might dedicate specific hours to reviewing investments, strategizing business growth, or networking with key individuals. Middle-class individuals, however, are often constrained by long work hours and day-to-day responsibilities. They may not have the time or energy to focus on activities that could grow their wealth, like learning new skills or exploring investment opportunities. The wealthy, by contrast, delegate lower priority tasks to free up their time for bigger opportunities. 7. Financial advisory. Finally, one of the most significant advantages the wealthy have is access to elite financial advisors. These professionals craft personalized strategies for wealth preservation and growth, guiding their clients towards smart investments, tax optimization, and estate planning. For example, an advisor might recommend a diversified portfolio that balances risk and return, or suggest strategies for passing wealth to future generations tax efficiently. The middle class often doesn't have access to this level of expertise, either because they can't afford it or because they don't realize its value. As a result, they might make financial decisions without fully understanding the long-term consequences, missing out on opportunities to grow their wealth.
These 7 strategies highlight the mindset and practices that separate the upper and middle classes when it comes to financial management and wealth building. By focusing on proactive investment, strategic use of debt, and expert advice, the wealthy position themselves for long-term success, while others struggle to get ahead. If you found these insights helpful, don't forget to like, comment, and subscribe. And let me know in the comments, which of these strategies are you most excited to try? Thanks for watching, and I'll see you in the next video.